All right. Hello, everyone. My name is Marek, and I'm the CEO of Vestberry, a portfolio intelligence software for venture capital funds. Today, I will be moderating a discussion on building a proprietary deal sourcing engine for venture capital funds. You can look forward to practical session. This webinar will be a lot of interesting case studies and examples as our speakers deep dive into how they've built their sourcing tech stacks at their respective funds. And who are the speakers today and what's on the agenda? Today we have Marton from Flashpoint VC, who has developed an advanced agentic system capable of removing nearly 10,000 opportunities per year. And alongside him, we have Ties from Dawn Capital, creator of Rolodex, a sophisticated data and AI-driven platform designed for relationship intelligence. The agenda is structured into three areas. First, we'll explore the power of proprietary deal sourcing, diving into the pros and cons of proactive versus reactive sourcing methods. And then both Martin and Thies will present their solution, and we'll look at how they approach their tools and how it adds value to their funds. And following that, we'll discuss key considerations when choosing between the off-the-shelf solutions and building customized tools internally. If you are considering to start building your tech stacks and start going towards your data-driven journey. At the end, we'll leave around 10 to 15 minutes for Q&A. So please feel free to submit your questions through the Livestorm interface, this application basically. And the questions are located on your bottom right. And additionally, we have prepared some engaging poll questions. So I encourage you to take part in it, and we'll see where the pulse of the data-driven VC community is. So now, without further ado, I would like to hand it over to Martin and Thies for their brief introductions. So Martin, if you could go first.
Yeah, thanks so much, Marek. So my name is Martin, and I'm associate partner at Flashpoint. And Flashpoint is basically an asset manager that has three distinct products. We have a VC fund that is currently at $200 million. We have a venture a venture debt fund, which is basically like a vehicle to give loans to companies. It's a slightly different product. It's currently a $50 million vehicle. Plus, we have a secondary fund, which is a $100 million vehicle to invest in later stage companies and do like secondaries only. The common denominator across all of these funds is that we look for something we call the efficiency edge. So we really like companies that have some sort of a cost advantage. And typically the way that it manifests itself is that there are companies selling into large markets like North America or sort of Western Europe, but have some of the costs, mainly the engineering costs in lower cost locations like Eastern Europe, for example. But this can also be just product-led growth in general that boosts the sort of revenue side of the companies while not increasing the CAC significantly. And so we're focusing on these companies, and we're focusing on the geographies, like North America, Europe, and Israel. And we basically have teams in these locations as well. So pretty broad team. And all in all, managing around $500 million. So that's pretty much the summary. And me internally, I had, alongside doing deals, mainly in continental Europe, I also had sort of the product division within the company, leading to full-time engineers to basically build the platform that we're going to talk about today.
Great. Thank you, Martin. Thies?
All right. So my name is Thies. I lead the data, tech, and AI efforts here at Dawn Capital. Spent 5.5 years at Google before joining Dawn. Dawn is a $2 billion B2B software European VC. So we are about, last fund was about $700 million. We have had many unicorn outcomes like iZettle, Neo4j, Quantex, Mimecast, and several more. And I have been leading the now 3-person team to build an internal data stack, both making choices on where to buy and more, now that we have so much engineering firepower internally, to do all the build.
Perfect. Thank you very much, gentlemen, for the introductions. So let's kick things off. As you both have built tools to enable deal sourcing in your respective funds, Could you perhaps critically look at the pros and cons of relying on technology when it comes to sourcing VC deals? I think that VC is a lot, about people and the human touch. So if you were to critically look at building tools for VCs for this part of the job, how would you comment on that?
Yeah, I can start if you want. I mean, I think it's super good to before. Can you guys hear me?
Yeah, there was a little disconnect, but you're back. Oh.
Anyway, so basically, like, my view is that it's really good to look at the market before you decide like whether you want to buy and build. And basically, it's good to kind of look at your own needs, like what are you hoping to achieve, and then what is out there in the market. What we found is that, for our particular use case, as I mentioned, we're looking for really this sort of like hidden cost advantage, which a lot of the times manifests itself in like having some Eastern European, let's say, engineers in the team. No existing solution was able to sort of help us with that, right? So basically, we looked at like the market and saw that there is really not much out there. So we sort of, out of frustration, basically started to build tools for ourselves. For a lot of other use cases, there are very good existing solutions out there. So I think it really depends on the individual needs for every VC.
Yeah, I think the reason many people try to build their own things is because they say, well, the existing software sucks. I think a lot of people, especially people that haven't ever built software or shipped software, don't realize why most software sucks, which is that it's actually quite hard to build software that doesn't suck. So the advice I give almost always to funds that are saying, should I buy or should I build, is you should first buy, and only if there's a real pain point and a real opportunity to invest materially in this, but almost always building is more expensive than buying. There's some exceptions, but then I think that the people that manage to build cheaper than buy tend to be very sort of geeky engineering heavy orgs, where people used to be software engineers before they were VC, and then they're like, oh, it's so easy with a little bit of cursor and a little bit of this, then I can put something together for me and for two other people on the team. But there's a reason why most software sucks, and it's just because it's actually quite hard to build something great.
Mm-hmm. And as you think of the tech stack that you build at your funds, how do you make sure that you get your unique pipeline or the pipeline that you want, right? Because I think at Martin you touched it, but like if we all get the same databases, we have access to the same sources of where the startups are. How do you make sure you get the unique pipeline first of all, and the pipeline that you want in this case? Martin, if you can comment.
Yeah, I think unique pipeline is really like it really depends on what you're looking for, right? And so like if you're looking for something unique, then you need to kind of find unique sources to enrich your like pipeline basically, and then you can like combine those tools, and then we can come up with something unique. I fundamentally believe that it's very hard to find something, depending really on the stage that you're like looking at. It's very sort of like at the seed stage, it's actually very easy to just one sec. Sorry, I have my kid here and he's like constantly shouting to me. Ties, do you want to maybe take this question first, and then I can?
I understand that the child is excited. It's a very exciting topic. For us, the challenge is less so which companies are out there. It is much more of a case of which one of them should we have a closer look at. And of course, we use a mix of buy and build solutions to get a first sense of what is out there, what seems to be getting traction, what seems to be in a space that we are really bullish on, and then make it much easier for one of our investors to have a first look at the website and/or first chat with the founder. I think what I was very naive about as a techie coming into the industry is how much in private markets is about private information, and how much of the challenge is actually getting access to the founder and getting them to take our dollars versus Index's dollars or Sequoia's dollars, or access is a much bigger issue for us relatively than just having heard of the company name in the past. So we have some mix of buy and build to make sure that we get a good pulse of the market. I think one thing that's overlooked is once it enters your CRM, and for the love of God, please buy a CRM. As much as I hate Affinity, please buy something off the shelf rather than trying to do the whole thing from scratch, especially if you have if you have 5 investors on the team. But what's been very useful for us is having some workflow built on top to be able to, for example, resurface deals that we qualified out in the past because it was too early for us, because we do typically Series A to C, that is now getting massive amounts of traction. So we can move sooner, because if we start looking at a deal when we start hearing about all the gossip in the market about that deal, almost always the round dynamics are poor. It's a very competitive round. Everyone else is looking at this. We have no good, strong, preferential pre-existing relationship with the founder. So where possible, we try to follow the right founders early and use tech where possible. But in private markets, I'm still, I think it's a feature, not a bug, especially for a large fund like ours, that in private markets, information is private, and that's fundamentally quite unfair. But that also means that we don't have to compete with the whole world, just the only other people that have access to that information. So I think that is actually part of the reason I'm very excited to work in VC, especially at a big fund, because I think you would have a massive advantage working at one of the big established brand players.
Yeah, I think just to finish my thoughts, sorry, so basically, I think as you mentioned, Ties, I think information is pretty private, so there is only a handful of external stuff that you can track, right? And I think the biggest like value add is really to figure out what are those things that you need to track externally that will actually give you like insight into when to reach out and who to reach out to, right? And so, as you mentioned, we also have like rediscovery systems basically within our CRM that allow us to like give us the ping, like, hey, now is probably the right time to reach out. Now there is some movement, there's some signals, basically, there's something is happening, and so you should actually go and talk to these people. And then you can also take it a step further and basically automate the outreach as well, so that it doesn't actually come down to human error, which a lot of the times it does come down to, right? Like you have to reach out, you just didn't do it, you just didn't have time. I think for us, we're a smaller fund obviously than Dawn. But for us, the biggest advantage that I see is that I'm the product manager, but I'm also the user of the product, right? So I have like almost no feedback loop, because I just I'm the feedback loop myself. So that is like a super useful thing. Also I need to take into account other people in the fund, but like usually what works for me works for them as well. So that actually is quite interesting.
Thanks, guys. I think this was super helpful, and perhaps I think this is a good also moment now to maybe dive a little bit deeper on the actual solutions that you guys are talking about. So I think Marton, if your sound environment allows,
sure. No, sorry,
you can
I'm
go ahead.
hoping that it won't interfere. But
that's all right.
Basically. But basically, I think we like the way that we started is that I came into the fund 2017, and I had a background in basically working in a startup in Doc Planner, which is now a unicorn. At that point, it wasn't a unicorn, but it was a very interesting experience. And in the meantime, I actually learned how to code myself. And so I was just like looking at this whole thing that we're doing, and I realized that we're basically VCs trying to invest in the technology of the future, but we're really using technology of like the 80s, right? Like we're using like Excels and PowerPoints and email pretty much, right? And so I was like, wow, this is like just wrong, right? So like, let's actually like apply something that we learned from, startups, and actually try to, actually apply it there. But what I found is that there is not a lot of ready-made technology, at least for the use case that we wanted to. But then I basically started to like build like the tools that we have today. I think we had a discussion with Ties, on like what is actually, just one sec. Apologies for that. So basically, like what we started with is really like the CRM, and I think a good fundamental CRM is really super essential, as Ties mentioned. There's a lot of people that use Affinity. We ourselves are actually using HubSpot, And the reason why we're using HubSpot is because it's API based, right? You can theoretically rebuild the entire UI of HubSpot using HubSpot's API. And so this is something that I really liked. And, initially I started to build tools on top of HubSpot in Google Sheets, because Google Sheets is like completely automatable in JavaScript. So, I was like, well, let's pull information out of HubSpot. Let's analyze it there, starting with Google Sheets. And then one of the first tools that we built actually was a tool which I called the multi-tool, because it's basically like a Google Chrome plugin that first of all allowed us to check a website and check it whether it's in HubSpot or not. And that was a super useful tool for us, right? Because what we were doing before is we were like, hey, have we looked at this company? I don't know, let's check the CRM. Let's go to HubSpot, type in the name of the company. And then, it took like 5 minutes to basically find the information. And with this one, we were able to like instantaneously find out everything about the company. And then we basically started to also create a layer on top of Crunchbase, like very early days, that would do the same thing, just like show us whether it's in HubSpot or not. Like, have we looked at this company or not? And so these were sort of the first baby steps that we did. And eventually we realized like, well, do we actually even need a UI part to this? And we were like, well, maybe not. And so I think at that point we hired sort of the full first-time engineer, because it's actually taking up a lot of my time, and it was like interfering with the deal making. So we decided that, okay, let's actually like take this a step further and actually hire a full-time engineer. And so that full-time engineer allowed us to build out a proper sort of Chrome plugin, and also start building out the workflows that we have today, which are mostly actually backend workflows. So we like on the UI side, we don't have that much available. It's mostly like backend workflows that pull information from several sources. And then the centerpiece of the information is still the CRM. So we still have like everything coming into HubSpot, and then, highlighting us what we need to do, how we need to, who do we need to pay attention to. We have a bunch of data sources that are enriching like HubSpot information. We have also HubSpot internal workflows that are sort of rediscovering companies for us. And then, I would argue that, a lot of I would say like probably 80% of the value that we have is like not visible to the naked eye in a sense, because it's like just workflows doing their things. And then if they're doing their things right, what you should end up with is basically just like booked calls, right? So when I'm showing this tool to people, I'm showing my calendar actually, because that's the output that I have. Because like companies are being discovered, they're being analyzed, like, whatever information we have about them, and then they're being outreached to. And so what I end up with is basically just book calls. And if I did my job correctly, those book calls should have high quality. Obviously, this is like, it's not always the case. I'd say it's like 80% of the time I'm correct. Like, there's a lot of like false positive and so on. And there are some obviously very interesting companies we can't get to like this. So, you need to apply some extra human touch there. But I'd say that it gets you like, 60, 70% there. And so for the rest of it, you will always need a human touch. It's like a human-centric industry. But, having the right tools at your fingertips is super important. So I don't know, like how much more like in detail should I go into, or should we like talk about also thesis solution, or how do we?
I think we have one extra slide for you where you have kind of a little bit of breakdown of.
Yeah, I have this slide. I mean, this is actually a slide from fundraising deck where it's like basically a good sort of like schematic overview of what we do. Because actually, like the way that we're thinking about automation is that, there's a bunch of processes within the VC. There is sourcing, selecting, analysis, and then basically portfolio management. And then, first here, we basically thought of like looking at the sourcing and the selecting part. And then the sourcing part, obviously, as I mentioned, we're looking at the databases, and then we're enriching the data, and then we're filtering for all of the stuff that we see here, right? It's like, it's a proprietary mix. We're always changing the values and whatever. But basically, as I mentioned, everything is going into HubSpot as our CRM. And then the other part is the selecting and sort of like the pre-diligence part, which is where it gets interesting, because this is where we start applying AI, right? If you look at like how we use AI, we're basically extracting information from the website of the company and also the databases, and then and then applying basically, we're testing all the tools. We're started with OpenAI, now using partly DeepSeek, partly Claude. And then based on that, we're sort of like starting the outreach. Just one. Yeah. And so basically after we book the call, we're applying also AI to extract KPIs from the call. As Ties mentioned, it's a super private type of information. You can't really like access this information anywhere else. You need to talk to people and then, analyze that talk and then extract KPIs. And then we have a score, which we call a great score. It's like a pretty handy score that we created for ourselves, which really easily allows us to overview the major KPIs that we have here. So, it's growth, retention, efficiency, ARR, and time left as in runway. And so this, we created sort of a metric out of this, which allows us to have like one numeric value attached to companies. So when we're looking at our pipeline, we can very easily understand like which are the ones that we should focus on and which are the ones that are less interesting. Obviously, there are many other factors, so it's not always the great score that that defines companies, but it's a very handy tool to kind of direct our attention. I think what I found is like a challenge of working with this tool is like, how do you get like structured information out of unstructured information? And I think this is where like a lot of the value lies within analysis. We're not like that very strong in that. We're trying, we started basically like looking at our previous notes and also started to like transcribe currently our calls and then extracting the values automatically. But I think there's still a lot of ways to go because, for example, our like analysis files and like all the work that is going into the sort of like later analysis of the company, that's sort of a completely untapped resource that we're not utilizing at this point. So, there's still a lot of way to go, especially for like benchmarking and, looking at best practices. It comes into like play later. But, for the first part of the journey, which is the sourcing and selecting, which I find actually like for most investors is the most critical part because we love like looking at markets and like thinking about problems and whatever, but we hate doing the SDR job of like reaching out and like, talking to, it's like the monkey job type of the job, right? So like no one really likes to do that. So if you can automate away like most of that, actually that is like a super high value add in my view. And this is what I'm hearing from the other parts of the team. We have like other parts that we automated, like we have an analysis sheet that we're using to analyze companies. So you have a certain data format, you give it to us, and then essentially we can do like a week of work in like a couple of minutes, like creating cohorts, creating SaaS metrics, creating all kinds of insights into like how the revenue is like moving. And then if you couple that also with the cost side of things, then it's actually quite interesting because it can highlight some causalities between the data that would probably take like a human analyst like either like a week to sort of like analyze. And that is very useful, but we're still lacking sort of the comparison and benchmarking part for sure. So yeah, that's pretty much it as a summary. How these things manifest themselves, like I said, a lot of it is like backend tools. We have our own Chrome plugin, which is like a proprietary tool that displays information about like companies as well as sort of website data, as well as like LinkedIn employees, as well as all kinds of analytics that you can basically get your hands onto. And then it also like couples that with basically like CRM information from our like own CRM. And then the other thing that I haven't mentioned yet is that this Chrome plugin, it actually allows us to also get leads from venture scouts. We have like 200 venture scouts, and basically this tool allows them to submit companies to us straight into our CRM. So if you couple the sort of like data-driven sourcing with the sort of human element of like the venture scout, this together actually, we believe that it provides us like pretty good access into deals that, large funds like, Dawn obviously have great brand names and whatever, we're like up and comers. So we're like, we're getting there, but until that, we have these like other ways that we can kind of find our way into deals.
Mm-hmm. Martin, if I may, one question. I think that
Sure,
I think that the outreach part was quite interesting. And what is usually the trigger point when you decide to write the founder or CEO?
One of the trigger points is obviously looking at when they have raised last, right? So we think that usually founders raise for anything between, you know, let's say 18 to 24 months. I mean, depending on like where we are in the cycle. But you know, if you see that there is a company that has raised last time, I don't know, like a year ago, that's probably like a good candidate. There can also be like other signals, like hiring, for example. If they start hiring, that means that there is like some signal that there is like a need for probably further capital. And then the third one is basically like employee change, right? We see if there's a large like change in employees, that means that something is happening there. Obviously, all of what I'm saying is actually changing as we speak, right? Because AI actually like just rewrote the rules a little bit. So like companies with like less employees can actually now make like millions and like, you know, tens of millions in ARR, you know, with like 20 employees and so yeah, it's hard. It's like an ever evolving thing.
And what is usually the success rate for replies? Like, do founders get back to you on this one?
Yeah, of course. I mean, it's pretty much just replicating whatever would happen normally as well, right? It's not like it's something special. It's just you're replicating. You're just like mimicking basically human work.
Yeah. All right. I think we no worries at all. I think that was this was super interesting, and yeah, just trying to keep the time. We had 10 minutes for Martin, so thank you very much. And now I would like to give word to Ties, so he walks us through Rolodex. So please, stage is yours.
Thanks, Marek. So we use data and technology to keep a good sense of the market and to understand which deals are out there, in spaces we like, what seems to be getting traction, what seems to be interesting. So to sort of not have to boil the entire ocean, we do that. But we're in a very lucky position where we invest in companies, typically Series A onwards, and just European B2B founders. That means that there aren't an infinite amount of companies that are possible. So we have an easier job in that sense than the pre-seed funds that have to convince the engineer at Google or Palantir to sort of leave the company. We can wait until stuff starts to approach about $1 million in ARR and then try to jump in. We've made exceptions, but it tends to be the entry point for us. And we have 15 investors in a big office. So we can afford to have lots of conversations because in private markets, it's just a fantastic way to filter through to get signal, to figure out, are these the founders? Do they think about the space in a compelling way? Do we like the way they come across? Are we excited about the vision that they're painting? I think there's two big experiences I had in my first couple of weeks at Dawn, which are the genesis of Rolodex and the reason we've leaned in so hard into Rolodex and AI-driven relationships. The first one is I attended a meeting between a partner and another partner at another fund. They talked for maybe 24 minutes or so in a 30-minute coffee chat. And then in the last 6 minutes, it was something like, so Martin, are you working on anything interesting? And as someone who, my first job at Google was sales, and my first job, the job before Google during college was sales. I was like, this is an awful prospecting conversation. Like if you are an angel or a earlier stage VC, this is really not how you would want to pick out what's potentially interesting in the portfolio. Like there are ways to use data signal to provide an automatic brief so that in the morning of I have a meeting with Marek, or if we're hosting a dinner here for 18 people, now because of Rolodex, you get an automated brief that tells you what you should be talking about, like which deals are interesting, what is interesting about their background, what's interesting about their space, what's interesting about the competitors. When we run it for events, it helps pick out who are basically the MVPs attending, like who are the most important people. And it also suggests who should be seated next to that person or get a heads up, right? It might be pre-existing relationship. If there's no pre-existing relationship that's strong with anyone at Dawn, maybe there's a logical geo fit or cultural fit. If there's a fintech person attending, I should try and put them next to Dan, because Dan is our sort of leading fintech partner here at Dawn, together with Josh. But this is all about using data and AI to just do relationships and meetings and events better. So to do the human stuff better rather than try to take the human out of the loop. And the second experience was there was this payments deal. I shouldn't name the name, but there was this payments deal in Northern Europe that we really wanted to get in front of. And the deal team tried really hard. They looked at Affinity. They didn't find a direct path. They then looked on LinkedIn. They got a couple of false positives because LinkedIn data is just super noisy. I mean, I have 5,000 LinkedIn connections. I think I would maybe recognize 50 of them if they were sitting, on the table next to me at the restaurant. So by the time they finally get in front of the founder, it's 3 weeks later, and the founder goes, thank you so much for all the work you've done. I can tell you've done a lot of work with expert calls. We're quite a thorough fund, so we write, 25-page IC memos with 50, 60 pages in appendix. And by the time we usually meet a founder, we've, had take-us calls and expert calls and invested real resources to get in. And the founder goes, thank you so much for all this work. I already raised 2 weeks ago, though, so thank you so much, but, maybe next time. So our general partner the next day is sitting at his board, and he is obviously not, in a super great mood. So he's moaning a bit about this. He's like, I was so excited about the space, and then we've been excited about the space for a while, and then finally this founder comes along that fits the space really well, and we think this is going to be the winner in the space. And two people at this board go, well, why don't you just ask me for an introduction? Because I'm an angel investor, and Anna is an advisor to this company, and it just it says so on our LinkedIn. So you really could have known that Anna could have gotten you an introduction. Anna goes, oh, that company, I love those guys. Like, they're going to do great things, and I love this space, and I think within the space they are the only company that's going to solve this. So Norma goes back to the deal team, and he says, with some swearing, why didn't you ask me to ask for an introduction? Because we had this pass to play, and I was unaware that I should ask for an introduction, so that we had an access point, and we didn't get in because I didn't ask. And the deal team goes, well, how am I supposed to know that you sit on the board with someone that's an advisor to a company currently top of our target list? Because it's sort of a 2-hop or 3-hop problem in a network graph. But network graphs are something I spend a good amount of time working on at Google. So I thought, we can just make a network graph. And we can make a graph of all the people that Dawn is close to and that we have lots of meetings with, that we've had lots of email interactions with. As of recently also, and this is on a complete voluntary share basis, but basically a proxy of your contact book on your phone. So on WhatsApp. So that also says hey, I WhatsApp a lot with this founder. I don't have calendar meetings with the guy because I know him back from my Google days. This is still surfaced in the Rolodex graph. So WhatsApp isn't a blind spot for us, which is exciting. And it also services, hey, Ties knows Nima, who was an angel investor in that company, which is the company that we're currently trying to get in touch with. So actually a great access point to startup.ai is for Ties to ask his friend Nima to provide an introduction to this company. And this has helped us most recently get into Blackwall, which is a B2B, which is a software business, Series B, that we're incredibly excited about. And the problem with the business was that the business was doing way too well. So the founder was like, look, I'm growing like crazy. I'm already cash flow positive. Why would I dilute? I don't want to talk to any VC investors. I don't like VCs. They're all with their quarter zips. I don't want them, which fair enough. And we were thinking, well, how do we get in front of this business? Because we've heard this person speak at conferences, and we're just extremely excited again about both the thesis and then the we think this is the right horse to bet on. And we ran Rolodex, and was able to surface that there was one of our general partners who was not on the deal team, had been on a board with one of the 2 board members of that company. And also that he was going to a conference in Brussels in 3 days, and that this other person was also going to this conference in Brussels in 3 days. So then the workflow is really, really neat, where the deal team was able to spot that possible connection, spot that upcoming interaction, and be able to say, hey, Josh, whatever you do at this conference, I don't care if you miss your panel, I don't care if you miss your keynotes, I don't care if you don't have breakfast, lunch, or dinner. Just make sure that you remind Stan of how great we were at this other board, and how we are incredibly passionate about Blackwall, and that pretty please, he gets us in front of Nick, who was the founder. And that is like a 2 or 3 hop problem that would just be impossible to solve through LinkedIn because it's too noisy, and through Affinity because it just doesn't fundamentally do 2 or 3 hop problems well.
Very interesting. And one thing that kind of caught my attention was that you mentioned that you basically try to follow these people also at events where you can potentially meet them in the physical world. So how do you actually plug that information, right? So like, how do you know that this person will be at that event, and how does it go back to Rolodex, to the online world?
So there's data provided. It's a mix of our own scraping of events and guest lists we get to making it very easy when someone goes to a conference, say the 0100 conference, that we encourage people to ask for attendees, and then it's very easy to run this through Rolex to surface and say, hey, ooh, there's this LP that's coming to that event, and they're a target LP for us actually on the IR side, and this makes it much easier for me to figure out who should I email when I go to Amsterdam on Thursday and Friday. And then there's data providers as well that you can integrate with, like SourceScrub, that also have more aggregate lists, which has been incredibly useful on the IR side as well for us to figure out which event should we go to, because if there's a certain event and like 8 target LPs went there last year, but we've never heard about them. Sorry, when I say them, I mean the event. That is probably an event we should put on our roadmap. That's probably a very valuable event for us to go to. And from there on, the data engineering to make sure that we pull calendar data where Josh and all the other DOM people are going to. But we're quite a disciplined firm. So I think our CRM cleanliness is pretty good. When I did sales ops at Google, I would have killed to have people actually do this as well. Of course, is it perfect? No. But by and large, people are very disciplined in terms of what they enter. And now that the ingestion and actually getting matches has been so good, people are increasingly, have been increasingly willing to actually feed more data into the machine, because they see more and more value from this. Because it really only takes a few of these big hits, and especially when you go to conferences, I mean, it actually takes a lot of time between the travel, between the scheduling stuff, thinking about where you're going to stay. Like, I also just I way prefer spending time with my wife than not spending time with my wife. So my bar for going to conferences is high, but it's fantastic that now we have a tool on something very, very human, where I think a lot of people don't think tech or AI really applies, like conferences, where we can get much more value out of them because of data and AI.
And what is the interface to Rolodex? So I have like better understanding of that. So let's say there are these LPs or founders at this event. Is it some kind of message on Slack, or how do you get that information out of Rolodex?
It's because relationships are actually quite a broad topic and have lots of different intersects, and different events are also quite different. We have different ways of interacting. I try to make it as easy and natural as possible to interact with the tooling. So where it's one-on-one meetings or scheduled meetings, as much intel as I can provide via email, the better. People here, despite being software investors, I think you can work at McKinsey so long without just really learning to love email and Slack. So as much as possible, I send via email and Slack. Some of the interaction in terms of getting paths is done via Slack. So I can go on my phone, I can go on my laptop and say, hey, give me 10 paths to Matic, and it'll surface, Ties and Matic have spoken many times before, plus we should know people on your cap table well through boards and angel investors and that kind of stuff. For the events, or sort of larger events / conferences, we have our own web app where people can either input a list of names, LinkedIn URLs, company names, email addresses, and it'll surface the most relevant people. We have different ways also to get that information out. Some people just really want the data in a clean way, basically in a spreadsheet, and then they can fiddle around with it. Other people want us to produce a email or otherwise keep the feed sort of live so that they can continuously refine this and say, okay, well, this is interesting, but I've actually thought about it, and I only care about stuff that has raised less than $10 million, or hasn't raised any funding in the last 6 months, or whatever else people would want as their filters.
And if you were to describe some of the sources of data that you used and you think are reliable data points, I think you mentioned one, but what are the other data points that go into Rolodex?
So there's our own, workspaces interaction data. We have a proprietary WhatsApp data, again, on a voluntary basis. No one who works at Dawn has the CIA monitoring them, in case anyone is worried. We use several of the sort of main data providers, think Crunchbase, Synaptic, Traction, PitchBook. We integrate with various of these. We then also do a whole bunch of proprietary scraping and the like on top, because there's some elements, for example, European business-to-business angel investments, where all data providers are pretty awful. If anyone is on the call and is saying, hey, I have the best API for European angel data, please let me know, because would be great to not have to maintain any scraping. But there's many big time angel investors where I can look on their LinkedIn and it'll be in a crappy format, but they're clearly attached with like 30 or 40 or 50 companies. I look on Crunchbase, there's 3. I look on Traction, there's 2. I look on PitchBook, there's 3. It's just not good. It was just not good enough. So there it was invaluable to set up some of our own scraping, especially because for each of these, like if we take a certain angel investor, let's call him Anna, because we have this Rolodex graph product, if for a target list company, Anna, who we are close with, and we know we are close with, if that person actually is an angel investor in a company we are excited by, or a company that's recently had massive growth, which we then would surface automatically to the investors, it's just a much nicer workflow to say, hey, there's this company, they weren't high growth in the past, they are high growth now, this is your Monday morning inbox. By the way, the best path in is Anna, who we know really well, so you should get, Evgenia should get that email that Anna is an angel investor in this high growth company, so she can action this straight away. But for that to work, I need to know which 70 companies Anna is actually invested in, because if I only get 5 of them, then we just miss so much of the value of that node in the graph network.
And you mentioned the signal of growth. So, for instance, what would be the source of information? Because I'm not sure how this is easily to scrape, because usually like they don't publicly like announce these growth rates or the ARR. Sometimes they do, but not most of the time. So, what would be the data source for growth that you rely on?
So there's a little bit of getting revenue data is very hard even for the data providers that I've seen. It's just lagging quite a bit, which in startup land, if you're trying to move first, is a real problem. So I don't think there's a fantastic solution. We have our own growth score, which we've concocted, which is, has a lot of the traction metrics, in some kind of weighted average, which is our leading indicator. It also controls obviously for company size, because headcount growth from 5 to 10 employees is nice. From 50 to 100 in the same time period is much more exciting or much more rare, which is why it should get surfaced higher. So we have our own growth indicator. I don't think there's nowhere near a perfect way of doing this. And I think this is why we rely so heavily on the relationships. And even now that we have this Rolodex Graph product, we're much more intentional about who are the people that we actually should be close with and what are the gaps in our network. Because if there's a certain investment partner, even if they work at a fund that no one at the top of their head would say they're a top fund, if they do top deals, they are by definition a good investor. Almost. I mean, some people get lucky, right? But like, it's at least worth them then to make sure that we have someone that has had lunch with this person, that has had dinner with this person, that is angled for some kind of introduction, to get a sense of, hey, does this person also come across smart, or does it really just sound like a fluke? And this has helped us be much more intentional about, for all the earlier stage investors in our network, who are the people that we really should be proactively building relationships with, and who are people that are less important outside in. People still have discretion, right? Some relationships also go long way back. Some relationships are hard to quantify the value of outside in. But it has absolutely helped us be much better at understanding who are the earlier stage investors and later stage investors that are critical for us to make sure that we get intel at the right time, we get access to deals when we need to, and where do we just have gaps? Because with 15 people on the IC, if you let everyone sort of go off on their own, you get a very siloed approach, and it's just not optimal.
Yeah. And one last question to Roldex setup. I think it's quite a lot about the data quality, and we kind of touched on it with the data sources. But do you have any methods or best practices how you go about data governance and the data quality on the input side?
Yeah. So in terms of who we know, that requires almost zero input from anyone on the investment team. So that part is quite clean. Our CRM about what's sort of the status and affinity of certain deals, that is quite clean, which is important, right? Like if we have a target list, it's important that the target list is clean. But I think that's a small part of the pain point. The massive part of the pain point is just the entity resolution and making sure that I don't know, Henry Mason at Dawn Capital, if I go to your affinity instance, presuming you use affinity, I would bet a lot of money that there's multiple Henry Masons at Dawn Capital in there. But there's very much only one Henry Mason at Dawn Capital here, as far as I know of, and I report into him. So there's a lot of entity resolution actually needs to be done within each data source, and then this really applies also to Crunchbase and then to Synaptic and then to Traction. Like all of these actually, I think, do a pretty underwhelming job. I mean, my background at Google really was data engineering, and I thought this would be easy peasy, and it was just very hard. So we built a massive AI-based entity resolution algorithm that also, looks whether the domain now currently has changed, or whether the LinkedIn URL has changed, or whether some of these email addresses are completely out of usage, really to try and clean this up as we deduplicate, because otherwise stitching everything together is really, really hard. And this is one of the reasons why at the start of the webinar, I started on such a negative note where I said, most software sucks, and be wary if you're going to build, because with I think the pretty typical, inflated level of confidence of your average Google engineer was like, how hard can it be to build something in a scrappy VC firm? The data engineering challenge to be able to get Rolodex to work properly is humongous. And again, I am a data engineer, specialized in entity resolution, hired a data engineer, specialized in entity resolution, pulled some favors in my network of people that worked at hedge funds and the billing department of different companies that really thought very hard about entity resolution. And it's taken us like 3.5 months to get something good in production, where actually all this stuff just works.
Martin, I think similar topic could be applied to your workflow. So how do you make sure that the data that goes into the system is of good quality, or how do you deal with these issues?
Yeah, I mean, there is a lot of data quality issues, as Ties mentioned as well, especially if you're doing your own scraping. I think it's always, essentially like all the data that we have currently relies on, in some, shape or form, LinkedIn, right? And as we've seen recently, LinkedIn has cracked down on some of the data scrapers. There's Proxycurl got sued, all this like Apollo got banned from the LinkedIn, and like, I believe that there is sort of like a reckoning coming to some of the like providers, and even if you're using sort of like first-party scraping, there is a risk that you might like face some issues there. So I think there is a big challenge there, like how to actually get the data, first, right, and then you can ensure quality. For us on there is still some manual involvement. Especially with LLMs, they're not so like great with numbers. So you gotta like until we find a more reliable solution, there is still some like manual oversight. So like some sense checking in a sense. But I think it's really, I think our approaches with Ties is like two very different like parts of the whole thing, because like ours is more like coming from sort of like the data and just looking at like how you can actually automate processes that humans are doing anyway. And then while Ties' approach is more like let's look at our network and how can we sort of like get the network. By the way, we looked at tools like, I don't know, you probably are familiar with like the Swarm and the Connect the Dots and all of these other tools. I mean, they're nice. We tried them. We didn't see like immense value just yet in them. But they're great tools. Like for early stage investors, I think it's like super useful to kind of look at these tools. And I'm like, how do we make sure that the data quality is there? I mean, our CRM is definitely more messier, so I can't say that that we have like 100% sort of like clear data. But I think where it matters, we just like take the extra step and actually like make sure that everything is properly there. And then work with the clean data, and then essentially like a large part of the because it's like it really matters like what's the purpose for the tool, right? Because like if the purpose of the tool is to actually discover something, and then someone anyway is gonna like take a deeper look, and that it's gonna be like much more manual, then I think it really doesn't matter that much if the data is if there are some errors, it's okay, right? It can happen. Like I'm okay with that personally. So yeah.
Ties?
Yeah, so just a very quick one on the Swarm or Connected Dots, because there are some things off the shelf. The reason we built our own thing is because the Swarm and Connected Dots, they rely really heavily on LinkedIn data. And the nice thing about LinkedIn data is it's really scalable and it's a really broad network quickly, right? So like pretty much everyone I have met that's been remotely professionally relevant, I will have on LinkedIn. The problem is that that's 5,000 people, and it just doesn't differentiate well at all between who am I actually close with and who are we not. So there's no calendar date integration, there's no WhatsApp date integration, and it doesn't differentiate between good high fidelity paths. So if two people are, for example, Kaufman Fellows, which most people are proud enough and deservedly so to put on their LinkedIn, we know with our VC context that's actually a very high fidelity path. And if the deal was done where the deal lead was a Kaufman Fellow the year above or below Evgenia, who's one of the general partners here, that is a string that she can pull. If two people were on the board together, then unless they decided afterwards they realized they hate each other, they should be able to ask for favors or have a logical way in. So it doesn't do the fidelity of path very well, which is a big reason why to build. But otherwise, yeah, building stuff is hard, and it's only worth if you are, I think, at a certain, depending on how big of a build you want to do. But I think to do something like Rolex, that really only makes sense when you are at a larger AUM fund.
Mm-hmm. Guys, thank you very much. We have 5 minutes left, so at least 2 questions from the audience. I saw that Marton already answered a few, so I will perhaps select the first one I see here, because that can be, I think, practical for other VCs as well. Which tools did you investigate, try before deciding to go and develop your own one? So we're discussing some of the deal sourcing, and maybe some other tools that you see in the universe of the VC tech, which are some of the tools that kind of resonated with you. Ties, if you can start maybe, and then Marton.
Yes, so on the portfolio reporting side, we use a tool called Dynamo, which I absolutely
use them too.
absolutely despise. The people there.
It's a Bulgarian company. It's like a very old company.
It's very old, and it feels very old, and the API is awful, and it's So we're actually looking at Vestberry, as Matic knows. So I think on the portfolio monitoring side, a lot of people that move into VC have such a high pain tolerance for hacking through everything just with Excel and slides. So if you are a company where quarterly reporting is actually pretty rough, and actually preparing the IR decks is pretty rough, there's a lot of automation possible either out of the box with Vestberry, or in the case what we've done, because my last job was Google Finance, to automate a lot more on top. I think if you don't use any CRM, whether you use HubSpot or Attio or Affinity, I heard great things about Attio at the moment. We actually churned from 4 months ago, or sorry, 4 years ago, and CRM migrations are awful. So as much as I don't love Affinity, I don't have an informed view whether Attio is better. And I am not gonna lead the charge on trying to try out different CRMs unless someone puts a gun to my head. But if you just use Airtable, I think you're being crazy. Like the fact that, because if you use Airtable, you also don't know who last met this person. Did someone else last meet this person? If you are yeah, I rest my case. I think if you don't have any CRM, I would start there. If keeping a pulse on the market is hard, looking at one of these tools that does this off the shelf, I think is a much better bet than trying to get some fresh data science grad with a Crunchbase API key to try and, keep a sense of the market. I think you should then just go to Synaptic or Harmonic or Spectre or one of these things off the shelf. Traction, maybe. I'll let over to Martin because I'm yapping a bit.
No, I think it's super relevant what you're saying. I think if you I agree that it's like a portion, like it's a function of the AUM. So if you don't have like a dedicated person or someone crazy enough to actually spend time on this, then you should just depending on whether you're early stage or later stage, you should really go with like Spectre, Harmonic, or like some of these tools for like signal discovering. And then for CRM, I think Ethio is great. I tried it actually. We're not going to migrate, as you said. It's extremely painful. And like the other thing that I'm missing, and depending on how much like outbound driven your fund is that most of the CRMs actually currently lack like proper outbound capabilities. And what I mean by that is like multi-channel outreach, right? So we currently, like, it was super painful to us to find a solution to actually use HubSpot plus like another tool called, we're using HeyReach now, to basically build this like multi-channel outreach. But to this very day, there is no solution for like stopping the outreach like programmatically, because HubSpot's API just lack like the stop API, right? So so you can even like in a super sort of like API driven CRM, you can run into like hiccups like this, right? So actually, I think one piece of advice is that if someone like feels that it has the like tinkering DNA, I would really start looking at like N8N, because that's actually like something that we use for most of our sort of like drafting work and some of the real life work, as well as to kind of come up with pretty clever automations. It's like Zapier, but actually a much better version, an AI focused version of Zapier, which you can self-host for free, which is something very useful. You don't need to pay like pretty large amounts. It's just like you self-host it and you can actually like work with them. Extremely good tool. And you can, for some of the, like, as we also started to use Dynamo, and then, for some of the stuff, we just like decided to like, it's actually easier to draft it in an N8N versus using built-in functions. So that's something that I highly suggest if someone feels, because it's a no-code tool. You don't really need like, you can like string up pretty interesting applications just from like Google Sheets and like Airtable or whatever. Pretty interesting tool. So, but yeah, I mean, I think, I would just really like, as Ties mentioned, start with a CRM plus like one of these tools, and that should, give you actually a lot of value already straight out of the box. And by the way, like this like Connect the Dots Inspector, the other tool, the Swarm, they're also trying to do like WhatsApp. I don't know like how much they're there, and it's like harder because they're an external provider, so they're it's like harder to trust them with their data, right? And as you mentioned, it should be completely voluntary. I think, unfortunately, the value of these tools is like how much buy-in you have from your team. And so, even I know that like we have a small team, but not everyone is like super happy to give their LinkedIn credentials, for example, right? To actually automate LinkedIn outreach, right? So, you can run into stuff like that.
Gentlemen, thank you very much. I'll have to stop it here because we are just on time here. Thank you very much. It was super valuable. I think this was great to see and hear practical examples as well. So again, thank you very much for finding the time to share this with us and also with the audience. For the people that joined us today, also thank you. This was our first webinar. So I would like to invite you also to our other webinars that will be happening. Also, we are doing in-person conferences. The next one will be in New York on the 28th and 29th of May. And if you would like to join us, we have some free tickets for you. And yeah, we'll be discussing everything related to venture capital, data, and tech. So we're looking forward to have you in our community, and see you later. Bye.
Thanks so much. Thank you. Bye.